The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're going to start the show off just a little differently today. I posted the chart for the DAX, but I have a very sad announcement. One of my very, very dearest friends is getting ready to make the transition to the other side. And Bob Gomillion is in very, very bad shape. And I would like for you guys to send out some white light. He was one of my best friends. I was best man at both of his weddings. I met him in 1972. I was still working at Eli Lilly, and I would drive home on Santa Monica over to the Highway 1 and go over to Canaan Road over to Westlake Village, and I would do that every evening. And once in 1972, when I first met him, he owned Wilshire Coin right on the corner of Wilshire and Lincoln. And I went in, and standing there was James Gardner, the actor, and another gentleman named Roy Huggins. He was the fellow who wrote and directed the Rockford Files. They were getting ready to do that. That was 2 years before they did it. And so I got to be friends with him over the years. And by golly, we took vacations together. And anyway, it's going to be a real sad thing when I lose him because there's so many of the wonderful memories that we have. Bob was one of the three coin dealers that Steve Markoff really trusted when he bought the Laverne Redfield collection back in 1976. And I just started working at Drexel in February of 76. And so Bob was already trading gold and silver with me at that time, and so Bob and I went up together to Nevada, to Reno, to see the collection. Leroy Linhart from American Coin and Steve Deeds was also the other two coin dealers, along with Steve Markoff. And the things that you read about the internet about Laverne Redfield, the fact that he was recluse and very very weird is all real, but the amount of money and the things that were involved are totally wrong. The collection, they say it was sold for $7.5 million. It was sold for a lot more than that, folks. I happened to be there when it was done, so I happen to know that. Just to give you an idea of what was there in the basement, which was about 3,000 square feet. He had all kinds of canned foods and stuff, but that's where he had bags and bags of silver dollars and gold coins and stuff. And one of the bags was a 1907 high relief $20 gold piece, St. Gaudens. Now, the man who developed, who took this coin, which was 1907, was Augustus St. Gaudens. That's the $20 gold piece that you see with the Liberty on it. And basically, what St. Gaudens did was he sculptured it so that it was an absolute, incredibly beautiful coin. It was like a 3D picture of the Liberty. And the problem is once the coin was stamped, they were so uneven because of the sculpturing that the coins would fall over. In other words, you couldn't stack them like you could with all the other coins. So they only made that 1 year, which was 1907, and it's known as the high relief. I just checked on eBay this morning, and or excuse me, I checked on Amazon. Was it Amazon or eBay? I checked the price of it anyway. Anyway, they go from $35,000 up to $75,000, and at that time, this was 76. Those coins were selling for about $9,000 to $10,000, but you couldn't find any that were in perfect shape. And this was a bag of uncirculated coin. That bag alone was worth almost $3 million. That was back then. And there were a couple of bags of Carson City silver dollars, which is not very far from Reno, and Redfield knew the people down there, so he would get the coins as they came out of the mint. And these were extremely rare. Some of them were $10,000-$15,000 a piece, and there was whole bags of those that were totally uncirculated. And what Markoff did he owned A-Mark coin, and it's listed on New York Stock Exchange now. And A-Mark, he didn't sell them all at once. What he did was he had these 3 coin dealers, Bob, which was one of them, and they brought these out, and they would sell them little at a time, 1 or 2 here and there, 1 or 2 here and there. And that's right. Laverne's house was not very far from Carson City. It was closer to Carson City than it was to Reno, but his address was Reno. Anyway, they spread it out over a long period of time, and oh my gosh, they made a lot of money. It took a United Van Lines to bring that stuff down. It was really, but anyway, that's the real story behind it. It was just under 20 million is what it was sold for, and the attorneys that did it should have got a lot more. It should have sold for probably 50 to 70 million dollars, and it made a lot of people a lot of money. But anyway, that's what's going on. We'll take a look here at the DAX. As you can see, we've been in this trading range. We had a nice 3 drive to a bottom pattern right before Thanksgiving, and we've been basically going sideways, to nowhere so far. And we'll take a look here at the FTSE, which is the UK market, and you'll see that it has been in more of a downtrend. We're in a little tiny bit of a rally this morning, but it's still a little more bearish than what we have going at that point right now. I have to tell you, I have so many stories that I could tell about Bob, but one of my favorite stories was we were at the track one day, and we were sitting at the table with Vic Tayback and Richard Jekyll, Tayback was an actor, and so was Richard Jekyll, and Bob, he liked to play the horses that were the favorite, and I bet $100 is usually most I would play at the races. I still like to do that, but anyway, we got stuck really bad. We were down about $150 each, and so there was a final race, and we said, well, I don't want to get into this. This is silly. Let's get talking about what's really going on with the markets, folks. I've got to cover something that I think is important. We're sitting at something that has not been seen in the history of the financial markets ever. Going back to the old buttonwood tree at the corner of Broad and Wall, we've never seen anything like that, and that's what's happening with interest rates, folks. I don't know if you know this or not, but I knew it was bad, but I didn't realize how bad it was until I got this chart from one of our listeners here at TFNN over the weekend, and I certainly want to discuss this at length, because this is a chart of the junk bonds versus the 30-year Treasury bonds. And if you'll notice, for the first time in the history of the world, junk bonds are yielding less than Treasury bonds. Folks, think of that just a minute. Junk bonds are B and below. U.S. Treasuries are AAA. Why in the world would anybody buy a junk bond that's yielding at whatever the thing is? It's under the yield is under the 30-year bond. Why would anybody do that? You're taking on an incredible amount of risk, and yet you're not getting paid for that risk. That defies everything. Remember what Bernard Baruch said: don't be concerned the return on your money, be concerned the return of your money, and this violates that rule in spades. We'll take a break here. I'll get off my soapbox. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
The question that we're having here is about the natural gas. Folks, we broke down really badly in let's just get this up here so we can take a quick look at it here. We broke down really badly in natural gas this past week. Let's get the chart up so you folks can take a look at it. You'll notice that big wide range day, once we went below that 302 level, and we talked about this, how important that was, because once it broke below that 382 level at the gap level, it really started badly. And then once we got below $3, it certainly was really not very not very strong. So that's the part of the reasons why it's breaking so much. I see no reason to buy natural gas down here today at all. It just doesn't appear to be any reason to do that. There is something that looks interesting though from the buy point, and we're getting very, very close to it, and that is the December wheat. We've got some really nice three drive patterns coming in here. Actually, it's a butterfly pattern and also a three drive coming in down about another 8 cents from where that's about 7 cents from where we're trading right now. So keep an eye on that wheat down there at that 306 level in the Christmas wheat. That would be equivalent to about 422 in the March wheat. So, pay attention to that if you like to look at the wheat market, because it's a completed pattern. And of course, we're into the delivery for December pretty soon. So you want to be trading the March wheat and not the December wheat, because you could trade December because we're not into December yet. But as soon as you get into December, you start worrying about the delivery. Even though they're going to warn you about it, it's still not something that you want to look at. Now, we have another market that's moving very quickly today. Well, it's not moving quickly, but it is moving. That is the gold market. This is a 4-hour chart in the gold. As you can see now, we've taken out the highs of the last 2 weeks. Above that 1297 level, we got up to 1299. That's the 78% retracement from the high in October. Anything above 1300 would most probably get this market moving higher, and because of that low in October. If you look at that very closely for folks, that was a 61% retracement in October, was the exact weekly 61% retracement. I mean, spot on to the exact 50-cent level. And then we retested it again in late October. You'll notice that we made that double bottom down there at the 1267. This could have very, very bullish implications. The only negative that I see to a breakout at this time is the fact that silver is lagging so doggone badly. I would think silver would be trading up around the around the 1730 level, and it's just a little above 17. So that's not a bullish sign from the gold and silver. I still think gold and silver look good from a longer term perspective without any problem at all. Now I wanted to bring up the chart here from JP Morgan. This getting back to the stocks, because I wanted to show you, what we have going on here. This shows that the number of people that are involved, you'll see they're almost fully involved. Margin debt is nearly 100%. Households are 94% into the market. Mutual funds 98%. Pensions 88%. Sovereign wealth funds 100%. Systemic strategies, whatever the heck that is. Hedge funds 98%. And equity funds 93%. Folks, let me ask you a question. Who's selling all this stuff to them? Hello? Something's not right with this picture. So be really careful of that. We haven't seen anything like that in a long time, so it's very important. This is a chart from, hold on one second, from from Merrill Lynch. Let me get it up here to let you take a look at it. You'll see that the Merrill Lynch accounts, which are very large, being at Bank of America, they have the lowest percentage of cash that they've had in the last 15 years. So they have very little cash to buy with. And where will the new money come from, Mr. Bill? I wish the heck I knew. Maybe it'll be quantitative easing. I don't know. But all I know is this door that's opening here is going to close. And when it does, and these people try to get out, history says it's not going to be very pretty, especially when you stop and think of these thousands of ETFs that are out there that I still don't understand what those things are. So I'm just watching it, extremely closely. We hold on one second here. Just give me 1 second here to get this done here. Hold on just a minute. I want to get one other chart here to show you what we're watching. Here's the one I wanted to show you about the U.S. credit and the debt as percentage of GDP. Folks, this is only up to date through 2015, but I wanted to bring it to your attention to show you how much money has been created. This goes back to the 1800s, so you can see the crash, stock market crash. We were at 185% of GDP. In the Depression, we were at 299% because nobody had any money. And then, of course, we came down in the 1950s, was the post-war years, and then we've been going up ever since, borrowing money. And, we're at $20 trillion now. We're very, very close to it. And that's going to put a really big burden on our grandchildren. And so we'll see how this all works out, but we are certainly got a lot of flush with liquidity in here. The question is, if it starts to dry up, we'll have to wait and see. But we're living in interesting times, no question about it. Folks, this chart right here, you should tack this up, put this chart up, and tack this up on your bedroom wall, because you're not going to see anything like this for very long. When you have junk yields. In other words, junk bonds are a better investment than a 30-year Treasury that are AAA versus a junk bond that's B-rated. Folks, I spent sleepless nights trying to figure out how this could happen, and the only thing that I can say is it's got to be quantitative easing that people are scrambling for yield, because the people that have been hurt the most over the past 8 years on this are the retired and elderly that relied on good interest rates. What do you get at the passbook account? You get 0.5% or something. What do you think the bank does with that money at 0.5%? You think they lower your credit card? rate? Of course not. And we'll see. They keep the mortgage rates are still low. 3.9% or something for a mortgage. Give me a break. Back in 1980, when you had to get a mortgage, it was around 15%. T-bill rates were 13%. So this is a different time. This is for sure. Anyway, we'll watch it very, very closely. Now, on the foreign currency, we got to cover the foreign currencies right after we get to the. 1 second, please. Right after we get to the break here, we'll cover the bonds and the foreign currencies, because these are they're really in the zone right now. But I wanted to bring up this picture of a 60-minute chart here in the E-mini S&P, showing you that the fact that we have a perfect ABCD pattern up there at 2603, and it's also a 1.27 expansion, for what we're looking at today, but it's still a little bit early. But we will get this moving here a little bit. One other thing, folks, if something happens that Bob passes away, I will be going to California for the funeral and for the services, and I don't know when that'll be, but I will be taking a day or two off to do that. So anyway, let's take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to hold on 1 second here because I'm watching the old wheat market, in the Christmas wheat down here at 410. It's going to be ringing some bells. Hold on just a second here so I can, oh, shucks, just a second here. Oh, what's going on? Hold on, Control R. There we go. Got rid of it there. Get a beeper off. I posted the chart for platinum. As you can see, it's lagging a little bit, but the one that I posted right after that, which is the silver chart, I hope, what is going on here with the, oh, I see. Hold on just a second, folks. I've got a symbol problem here in the wheat where I've got a double signal. And we want to get this down here. Hold on 1 second. We're only about 6 cents away in the wheat, so keep an eye on that. Probably tomorrow would be a better day. Well, even if it hits it today, we'll see. Hold on. Let's take a look at the silver. I think I posted that silver chart. Here it is. Let's get it up here so we can take a quick look at it. And you'll see that silver is lagging really badly, folks. It's up a little bit, but compared to gold, which is taking out those October highs, this is not a bullish sign. Remember, let's just remember, keep our memory alive here. And of course, as you get older, you have to. But if you'll remember here, that's the 60-minute. I don't have the long term. Yeah, here it is. Here's what I wanted to show you. If you'll remember, if you go back, and this is a daily chart on gold, but if you go back and go back to last December of 2016, 2015, and 2014, you realize that we made a very strong bottom during December of those years. And this is what I think is what we're going to be looking at here, that we could get down about another, well, we could get as low as 1203. I'm thinking maybe 1232 or 1235, but that's what I'd like to see is a low in December, completing this, because all we're doing now is we're just testing these highs from a week or so ago. So I can't be a buyer of a breakout here in gold. Hit 12.99 today, but I'll have to defer that. But I'm really looking for it to come down into this cycle low, which is due towards the end of December, which is another 30 days. And the way it's acting, it doesn't really like, what's going on right now. I heard on the news today that 44 cents of every dollar spent online went to Amazon. Folks, can you imagine that? 44% of the online business went through Amazon. Shut the front door and raise the rent. Mr. Z, it was Bob Gomillion. He's one of my dear friends, and he's in very, very poor health right now. He's been in poor health before. He was in a coma in 1992. A doctor operated on the wrong side of his brain. He had an aneurysm, and he got a huge medical settlement, but he's not done very well. But right after that, he was in a coma for 6 months, and his wife asked me to come over, and the family did, to pull the plug on the machine. And I went over to Southern California to do that. And after I got there, I had my hand on the plug itself, and they decided not to do it. Well, 3 months later, he finally came out of it gradually. When they told him that I had done that, he got mad at me. He didn't speak to me for a couple months, and I told him, I said, Bob, I wouldn't want to live the way you were living. I would rather you pull the plug on me. But he forgave me, and we still remain friends. But that's neither here nor there. I could write a book about all the fun we had over the years at the racetrack and stuff. Gosh, he knew so many people, and everybody really cared about him a great deal. So he will be missed when the time comes, but right now he's still with us. So, and he's got longevity. So who knows? He's only he's 2 years younger than me, so he's only 75. Anyway, let's move on here to the next one here. We want to talk about is the U.S. Let's go with the bonds first, because I think that's where the big surprise is going to come in these markets, because it's a much larger market than stocks. If we look at this long-term weekly chart in bonds, we made the high almost 2 years ago. Well, it was a year and a half. Back in June of 2016, we had that big butterfly pattern up here at the 3-drive pattern. You could see multiple 1.618 expansions. That's when we hit the 177. That's when they switched over the bond contract, because the old high in those bonds was like 1 169 or something, and when they switched over the specifications on this, it took it up to 177. Then we had the big break into 2017. Remember, interest rates have been going higher now for well over a year, folks, and we've had a 382 retracement, and this is, this is a very, very negative chart. Interest rates are going to go higher. I don't know where it's going to come from. If we look at the daily chart on the gold, you can still see that we could reach up one more time up to this 156 level. I'm not sure we're going to do that, but there's also that possibility that we could make that ABCD pattern, and if we did, you'll notice that that would be a perfectly symmetrical head and shoulders pattern, from June being the left shoulder, September being the head, and the right shoulder coming in at this 156 and 3/4, 156.24 level in the bond. So kind of keep an eye on that if it's going to get there. The only way I think it can get there is that we could get to the level of some type of a flight to quality, if there is such a thing. Folks, how can you say there's a flight to quality in Treasury bonds when junk bonds are selling at a premium to Treasury bonds? Stop and think of that, folks. That is the dumbest thing I've ever heard in my life. It's just insane, and yet nobody even seems to be concerned about it. So I guess, like Henry David Thoreau, if you're walking in the parade and nobody can hear you, you're walking by yourself, or something like that, whatever he said. You're walking to the tune of a different drummer, whatever way. We'll see what's going on here. Okay, the other thing that's been happening in the markets is the foreign currency. I wanted to do the Treasury notes to show you those because they are even weaker. These are the shorter term rates, and if you take a look at that, these are also very, very weak, and it looks like we want to go higher. So I still can't get over the fact that these, if someone knows the answer of why these the 30-year Treasury bond is at a discount to the junk bonds, I'd really like to know that. That's come a long way. By gosh, I imagine Mike Milken is smiling because back in 1973 when he went to work for Drexel, the way it is clear to you? Well, good to you, buddy. I thank you, Mr. Z. You're a smarter puppy than most people that I know, but I certainly don't figure it out. But when Milken started this, he made they were called junk bonds, and he gave them the name of high yield. That's when they couldn't get interest rates, these companies, and now it's totally a lot different. So let's take a quick look here and see what the market is doing this morning. We'll look at this very, very quiet. The S&P is basically unchanged. That's it, folks. If you're looking for a low risk buy, we're right here in the Christmas wheat at the 1.27. Multiple ABCDs down in here. There is a possibility we can get to the 1.618. So I wouldn't buy it until it shows some strength, but watch it really closely here. It's a really nice pattern in the wheat market. So sort of pay attention to that if you get a chance here. So we'll take a break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, basically we're going to take a look here at the crude oil market. As you can see here, we've completed some pretty big ABCD patterns here, but what I would like to share with you is what's happening in the heating oil market. You'll notice that we're up here at this 1.618 expansion again at 195 per gallon. And folks, we've been here for several weeks. We have not broken out to the upside like we have in the heating in the crude oil. So this could be a sign that the crude oil could be reaching a spot where it's going to react a little bit. We're down about 80 cents this morning. With still really nothing, just a small sell-off. But there's always that possibility that we could get something a little bit more dramatic here. The fact that we're seeing the divergences that we're going, we've already seen the divergence in the natural gas contract, so it's going to be interesting to see how this works out as we go through this energy section. Okay. Now, the next thing that we want to cover is the U.S. dollar and the euro. We want to bring this up here because the euro is very, very close, folks. If we can take out, this is the weekly chart in the euro. If you remember, we were looking for it to come down and to touch the old highs, which we did at 1587. 115.87. We're now trading at 119.50 and change. If we get above that 120 level, 121 level, folks, we're looking at prices to go because that's a 382. It couldn't even make a 382. That would mean the euro could really move, and why I don't know. But you don't want to fade that. But we're up against really strong resistance right now at this 119.50 level. If we clear. Let's see, where is the euro trading right now? Let's just look at it. We're trading at let's get it up here. We hit that 119.50 again, and now we're trading at 119.36. So that 78% level is held, for a short period of time right now. So we're getting stocks perking up a bit. We're back up in the S&P and the Dow Jones. The bonds, I still think we've got a chance to get a little bit higher. A lot of resistance up there at the 154.28, but clearing that, we could get up there one more time to complete that other ABCD. But the bonds are very bearish, folks, as are the notes. They well, they could change, of course, but the overall chart picture in these looks extremely ominous. I would be very, very skeptical of that one. So pay attention to it as we see here. We're coming up strongly now in the Dow Jones E-mini. We're up to this 2563 level. There should be some pretty good resistance around the 23,600 level in the Dow Jones E-mini, but it's a little bit ever. It's basically, you know, Amazon is the one that's been going bonkers today, so we'll just keep an eye on that as we look at this each day. Hold on one second. I have to turn off these limits because once they hit these prices, I want to watch them closely, and we're seeing this number hit right now in the Dow E-mini, and I wanted to double check because I believe, yes, we're right at the 78% level right here at the 23,000. Uh-oh, what did I do wrong here, Larry? Hold on. Oh, dear. Uh-oh, just a second here. Let's get this straight. Yeah, right there, we just hit it at 23,562. That's why the limit was going off. So, you know, it's only at 61 now, so it doesn't mean very much. But we'll keep a very, very close eye on that as we look at some of these other things. I don't have any guests this week, folks. I've tried to. Most of the guests are on vacation, so. Will just be me this week. The following week, I'm hoping to get some of our regular guests back on, and of course, we'll have Norm Winsky on as we come into the next full moon, which is I think it's sometime around December 3rd, maybe somewhere in that ballpark. We'll have Norm on, and we're going to have Stan Harley, and we'll also have Bill Meridian, and we're going to have Bob Miner. And so we'll have some of the Bob Miner is actually looking for a top here in the stock market sometime in the next 2 weeks. But the price level is going to be probably determined on the time that we're looking at these things. So we'll keep it close to the vest and see what happens as we look at some of these things. Hold on a second. I've got to be able to. Oh dear, what did I do wrong here? Oh no. Oh, shucks, I just lost all my data. Oh, brother. This is not making me very happy. Ah, it came back. Thank goodness. That's good. Okay, well, we backed off a little bit in the gold. We got to 12.99. We came down to 12.93. That 12.99 was a 78% level from 2 weeks ago, folks, so that's not too much going on right now. So we'll watch this very, very closely as we go through here. Unfortunately now, all of my charts are not... Oh dear, I've got a problem. Well, I'll worry about that problem later. Let's move on to the dollar index because this is the one that I want to really talk about, because this dollar index, folks, if we yeah, well, I need somebody smart to handle the data, that's for sure, Dudette. You'll notice that we had that ABCD pattern up there on the 20th of November. Then we had the 2 hard down days. We're back at this level again at 92.66 level, I believe. That matches the low of the right shoulder back here, so that's an important spot. It's got to hold this level. That's why that euro cannot get much above 119.55, folks, because if it gets above 119.55, that's telling you that it's heading towards that plus 120 level, and you don't want to have anything to do with that. Because if this U.S. dollar index really starts to get weak, and look at that 382 that we had, you know, back on October the 28th, right at the eclipse. If that's the C leg of an ABCD, you're looking at something really serious in the U.S. dollar. This would push prices in the dollar, you know, extremely. We'll be giving all of our grain away. We'll be giving our technical products away. We'll be giving our oil away. So I don't know if it's going to do that or not. But if the dollar gets really weak, that's what we will be doing. You know, it'll make it great for people who want to come to visit the United States for vacations and stuff. But for the farmers and everybody else, it's not going to be the a very happy thing. I don't think that's what's going to happen, but if that were to happen, you'd be looking at it. It's not bullish for gold either. So we got to pay very, very close attention to that as we're watching it. I did want to share with you a little bit about these junk bonds because we talked about it. I put the high HYG, which is the ETF for the high grade. You'll notice here that we did have a head and shoulders pattern here since May. The market broke down. We rallied right back up to a 61% retracement here as of the close. And if this is correct, it shouldn't get much lower than this level, but we'll have to wait and see. Anything above 89, you wouldn't want to be short this one. But the technical pattern is pretty good on it. But the ETFs, like I've mentioned many times, I don't trust those things. Those are derivatives of derivatives, in my opinion. And as Warren Buffett said, those are weapons of mass destruction, and I don't really care for it. Can someone tell me what the last price of Amazon is? Someone said it was trading above 1,200. I noticed that Bitcoin hit 9,700, very close to $10,000. If you remember, anybody that went to our webinar with John Jameson, he expected it to get to 10,000, and it's 9,700. And this is just the beginning, folks. It's not about Bitcoin. It's about mining. It's about Bitcoin mining is what it's about.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to change the subject here a little bit. There's a story out there on the internet that I been following along with Sarah about this girl that was stranded in Philadelphia, and this veteran helped her with his last $20. He was a homeless guy, and they raised $1,700 very quickly on Facebook, and then CBS Morning News got a hold of it, and they raised a lot of money, into the hundreds of thousands of dollars for the guy. So this goes to show you one good deed led to another, and it's certainly been, life-changing. So try to be helpful to the folks that don't have as much as we do during these holiday period, and also non-holiday periods too. Anyway, the crude oil is down almost $1 a barrel so far, so kind of watch for a rally in that. I think if you got about a 60-cent rally in crude oil, that would probably be something to take a look at. And don't forget the wheat. We're down here at the Christmas wheat level. Looks really interesting here, and I would certainly keep a close eye on that as we're looking here. And we've reached we got a little bit higher than the 23580, 33565. We got up to 75 in the Dow Jones, but that's only 15 points. We made a slightly higher high, of course, in the S&P. We haven't done it in the Nasdaq yet, but that could certainly do it. Now there will be a sell-off someday in these stocks. Whether it'll happen in my lifetime or not, I'm not sure, but we'll have to just keep it in mind. Any close above 1302 in the gold, I would consider that as very, very positive. But like I mentioned, because of the lagging market of silver and the fact that we're still looking at a low to come in December in the gold because of seasonals and the historical lows that are made then, that I would look at that as a spot to be buying gold, but not here. I don't do very well, buying breakouts. So watch this, very, very closely. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!